do a quick live stream specifically on crypto, right? I haven't talked about crypto on a live stream or it's been a long time. And that's not in any form of negative conversation or any intent, right? The reason I don't specifically talk about crypto is that it's not my direct niche to talk about these kinds of projects. Let's call it what it is. It's speculative. Now, I'm invested in crypto, but I don't want to push crypto to a lot of audience members that need to pay their bills, right? Because let's call it what it is. Right now, in the form of a financial investment, crypto is a very risky investment. One could be here today, gone tomorrow. I'm sure if you look through the stats, 90% burnout, and all of the hype goes towards meme projects. And I've covered a lot of meme projects, right? I haven't covered like the top threes or any of the top fives or the top tens. And I just wanted to make a video dedicated to crypto. I'm not against it, but just understand that it's a lot more complicated than just, saying you're for or against. And I see a lot of other content creators just constantly pushing specific projects. And to me is just an ill intent. But, I wanted to go through just some of the, just some of the talking points specifically about crypto, since right now the overall economy isn't doing the best. So a lot of people are looking towards alternate methods of investment. So, let's just see, right? Crypto has been doing very well, right? Like, I know it says it's red right now, but if you were to zoom out and just look at, say, like the year, I think crypto is beating almost everything, especially when you're talking about the stock market, you're talking about real estate, you're talking about other private equity. So let's get into a few talking points, right? So we're seeing CNBC, we're seeing Fox, we're seeing all of the legacy media networks and outlets specifically have correspondents on to, I guess, discuss their talking points, and we're gonna go through them.
Round above $112,000, while Ether drops to $4,500. And Pantera Capital's Paul Varadakis breaks down his new report detailing this year's rise in venture capital funding for crypto. Welcome to CNBC's Crypto World. I'm Brandon Gomez. Digital currencies are mixed this morning, with Bitcoin in the green by noon Eastern. The cryptocurrency hovered around $112,000. Meanwhile, Ether fell more than 3% this morning and crossed below $4,600. And XRP is also in the red, falling more than 1% and slipping below $3.
Now, if you guys are financially invested in crypto, let me know down in the comments below. I'm only in like the top two, right? Bitcoin and Ethereum. Outside of that, I have no knowledge. There's so many projects. There's so many things to worry about. And if you don't know, the method on this channel is simply just dollar cost average and relax. Right? That's it. So let's get into it.
All right, jumping to our main story, Pantera Capital out with a new report breaking down the state of venture capital funding in crypto this year. The report found VC funding for crypto projects jumped by more than 54% compared to last year, driven by regulatory tailwinds and major companies doubling down on digital assets. Crypto World's Mackenzie Sagalos talked to managing partner Paul Varadakis about the report and what the trend means for the industry.
So this latest report on crypto venture capital trends finds that fundraising for startups is rising, up to $16 billion from $10 billion last year. So let's start right there. Where is this money going? Which kinds of projects are raking in the most cash? Or is this just a broad return into the crypto space in general?
Thank you so much for having me, Mackenzie. I'm excited to be here again. I'm a managing partner at Pantera Capital. I've been doing this for 11 years. We've hit on 22 unicorns I've been a part of and led 17 of them. So I'm extremely excited about where this industry is going right now. This is the best time for an entrepreneur and investor in this space. And really the reasons why we're seeing some record-breaking numbers in the first part of this year is because of the Trump administration. The Trump administration is really leading the charge to make sure that US is the crypto capital of the world. And with the regulatory clarity around the Genius Act and also what's going on with the Clarity Act, bringing sort of fundamentals to tokens, we're seeing a lot of institutional interest in crypto right now, starting off with, the IPOs that are coming through, Circle IPO, and of course, like Bullish and Figure and BitGo and others. And then, of course, these digital asset treasury companies really bringing a lot of institutional interest into single assets like Ethereum, Bitcoin, and Sol. But really, the first part of this year, 16 billion, I mean, we've already eclipsed last year's number. And we're going to basically, by the end of this year, I believe.
Now, that's one thing, right? Because all of this is specific private equity wanting to put their money in something, right? That's what VC venture capital is. If you don't know, venture capital is simply just rich people wanting to invest in what he says unicorns. Being able to put your money in something that's worth $100 million and hopefully getting to $1 billion. See, the aspect of like small business is really wild. All you need to do is have a massive return so the private investor can like exit out on the next seed round. But seeing that a lot of funding is going towards these projects, you simply have to find out where the money's coming from and if it's leaving other sources. Is the money leaving the real estate market? Is the money, or was the money always in private equity? Is just specifically trying to target crypto projects. And I know specifically in the past like 5 years, AI and large data centers have always been a loved darling by venture capital firms. And I would imagine that those firms can try to find or raise services or raise funding by migrating to crypto. Let me know what you guys think on that.
Eclipse the total of the last 2 years combined. And the reason for that is that like we're starting to see a lot of capital wanting to invest into infrastructure building on top of crypto. So it all starts with like custody, trading, and then it goes into spaces like artificial intelligence and payments. With the Genius Act bringing.
Yeah, see, he talked about AI. Again, I would imagine that when you're talking about crypto projects or crypto companies that are small, starting up, it's large data centers that operate with software, blockchain, AI, all of those like securities, complications. So I'd imagine that those companies would do what's required of them to raise the funding, specifically if they need it.
Stablecoins into a more sort of like a regulatory compliant way. We're starting to see a lot of companies building B2B and C2C applications, allowing folks to use the blockchain for faster, cheaper, and more transparent payments. So really, artificial intelligence and payments are really sort of driving a lot of the growth. But we're going to see a lot of growth around decentralized finance and other areas too. Again,
now the three that he talked about specifically, the first being Bitcoin. Let's look at this one. Hold on. We're currently seeing it at 108,000, but again, we're long-term investors on this platform. It's up 81%. That's wild. Now, I want to look at other projects. He talked about Ethereum. All right, gotta go back. Talked about Ethereum. Let's look at that project. And again, we're going to look over the year because we're trying to equate to long-term investments. We're looking at up 70%. And the last project he talked about was Solana. And over the year, it's showing 42%. So you're talking about Bitcoin leading the charge at an 80% return over the year.
Like record-breaking numbers so far this year in terms of funding. We're seeing over 100 mergers and acquisitions happening within the space. And we think this trend is going to even accelerate throughout the rest of this year.
Now, one of the things that you say in this report is that this cycle could be different than past ones, where the usual ups and downs of the markets may change. Talk about why you expect to see a shift in that pattern or more stability in general.
Yeah, I think it's a combination of the fact that we are seeing a lot more institutional capital coming into the space. And this institutional capital is a lot more sticky than retail capital in the past. Again, the record-breaking numbers in the past have been in 2021 and 2022, and most of that capital was retail capital. Especially now that we're seeing more and more ETFs come to market, digital asset treasury companies, companies that are going public, the institutional capital that's coming in.
See, that's the thing that I'm afraid of the most. Right now, he says we're seeing institutional capital come in, meaning the money is moving. What if the money is moving because of government regulations? What if they change? Right? What if overnight the next presidency is like no crypto? Does that money completely withdraw? Does it hold? Are these currently superseded? Like, are these grandfathered in? Let me know what your guys' thoughts is on that.
Is coming in a very large way, and it's actually waiting to come in even more. And so we believe that capital is going to come. They're long-term holders. They're sticky. And then on top of that, I think the other thing that's going to drive more capital coming into the space is around tokens. With the Clarity Act, we do believe that there are going to be a huge influx of companies that will launch tokens later this year, companies based in the United States. And these token projects will actually have fundamentals. And there's a lot more tools and data for institutional investors to evaluate these token projects. We're not going to see a lot of like really design tokens that really kind of bring a very high price and sort of like low flow. We're going to see a lot of tokens really have a lot of liquidity out there, and thus they really do have to show that they are hitting product market fit, that they do have fundamentals for these tokens to sustain value.
I feel like by default you need to have fundamental value regardless of what the project is.
But we do believe that we're not going to see a flash in the pan around token models going forward. We're going to see really companies that find product market fit, that are resilient, and that are institutional grade.
And one of the things that we discussed extensively on this show after the last crypto winter was this pivot of VC interest away from Web3 and crypto and into AI a couple of years ago. And you were getting at this a little bit earlier, but where does that stand now? Is crypto still competing with dollars going to AI startups? Is it wrong to think of it as a zero-sum game that you have winners and losers here?
we believe that there's been a tremendous amount, and rightfully so, going into artificial intelligence, and maybe it's a bit, you know, overbought right now. We believe that there is a lot more of an edge to be investing into crypto right now, where there's not as many folks yet investing into crypto. You know, the crypto funds are, you know, looking at the 16 billion. I mean, I would say the trend has been not as many deals as before, but larger deals, more conviction deals, and the crypto investors that are investing are sort of more established. But the traditional VCs haven't really come back in yet. Growth investors haven't really come back in yet. And so here's an opportunity to be investing into an underlying technology that not only will help disrupt artificial intelligence, you know, as we have seen, open source models have been extremely powerful. DeepSeek has been extremely powerful to be able to make headways against OpenAI through being open source. And so we do believe that open source data, open source modeling, and
See, the thing again is that all of this is just a technological change. So on one phase, it's AI. The next, it's crypto. The next, it's hosting. The next, it's, you know, video management. It literally it changes in the same, you know, conversation or sentence, where VC capital, right, the money funding these projects, all they care about is the next hotness. They want the next 10x return. So in order to get the next 10x return, they have to have outlandish promises over that decade. So, you know, seeing VC, you know, funding on the rise is likely, you know, hopeful for the next 3 years, which likely is, you know, an average like seed fund round.
agents that can more accelerate the adoption of AI and the execution of AI, really just through, you know, tokenization is going to be huge. And so crypto is going to be disrupting AI, crypto is going to be disrupting finance, crypto is going to be disrupting real estate and so many other industries. And so this is the best time to be investing into crypto.
Let's very specifically talk about what kind of disruption you're referring to when you talk about crypto disrupting AI.
Yeah.
I'd love to hear more about that. But then also, is this a play at decentralized LLMs where people are really concerned about privacy?
Yeah, so the beauty of crypto disrupting AI is, number one, you can really incentivize folks to contribute more data, diversified data, better data into these models. And then you can even incentivize folks to help curate the data behind these models. And then you can even create ways for folks to contribute models and build on top of other models. And there's been less of incentive to do so before, because, you know, like there's no privacy, there's no attribution to who's contributing what to these different models. But you can have both of those happen on a blockchain. You can have the privacy, you can have the accountability, the traceability, and then be able to hopefully through open source have better models. And then from there, you know, it's hard for these models to, or these AI to have its own, or these agents to have their own.
So here's the aspect of when people talk about the blockchain and decentralization, it's really hard to understand the actual real world implementation and or adaptation of what these look like. Right now, if I were to go into Walmart, how do I pay with crypto? Say I have my Bitcoin wallet, Coinbase, for example. I have to use a third-party agency to convert the crypto, that Bitcoin, into dollars. I'll use, what is it, like BitTransaction, Bitstamp. Is some third-party transaction service, right? No different from right now. The MasterCard, the Visas, the Amex. There's someone taking money off of it because of the transaction fees, right? Someone's clipping me off somewhere. So it's just one of those processes that it's hard to, you know, wrap my head around, because the actual adaptation specifically of what he's talking about is a decentralized LLM, which is a really hard concept, especially for an end user like myself, right? Like, so yes, this could be a potential, but I'm still waiting on actual implementation from us actually transmitting crypto freely. So why not work towards that rather than, you know, a 50-year project?
On bank accounts, but, you know, they can easily work with a crypto wallet and be able to interact with all of these on-chain assets. And so, you know, right now, I mean, we're seeing $280 billion worth of stable coins, they're tokenized USD on chain. And, you know, on top of the, you know, tokenized USD, we see tokenized treasuries, we see tokenized mortgages. We're going to see a lot of things being tokenized. And then imagine an AI agent being able to interact with all of these tokenized assets with a sort of a self-owned bank account that they can interact with in terms of its own wallet, crypto wallet. It really brings a possibility of these agents being able to transact 5 to 10 times like in volume compared to sort of what they would do traditionally through like the banking system.
Shifting gears, how does the rise of crypto IPOs play into this return of VC money into crypto? One of the big things for a long time was investment firms didn't really see an off-ramp for their investment because these companies weren't going public. Many of them were trying to find profitability. So now it seems like the floodgates are open on Wall Street, right?
The floodgates are open. I mean,
now, 2025, we're able to have so many different methods of public offerings. Data centers are public, crypto miners are public, brokerages are public. There are so many aspects of the crypto infrastructure being public that's another good reason on why VC funding is towards projects for crypto
Pantera
specifically.
has invested into most of the companies that are going to go public within the next 2 months. BitGo, Gemini, Circle was one of our early stage investments. And we actually just held an IPO workshop for our portfolio companies where we're going to see 10 to 20 more probably in the upcoming future going public. And it's an exciting time. That means that it's going to open up the floodgates for traditional VCs to come back, growth stage VCs to come back, institutional investors to come into this space. So, we believe that this is tremendous. As more institutional and VC folks get exposure through crypto in these pre-IPO offerings. Once they have a little bit of skin in the game, they're going to be more incentivized to get deeper into the space. And I think that capital will flow more to the early stage companies. And so, we're starting to see a lot more of those folks starting to look back at Series A, Series B rounds, and maybe even seed rounds. So this is going to be tremendously huge for the industry.
All right, that's all for Crypto World today. We're back again tomorrow, and we'll see you then.
All right, let's check on the next one. Now, obviously, crypto's a big hot topic. Look at these returns. Hold on, let's go to CoinMarketCap. Look at these returns. 80% of the year. That's what these founders actually care about. That's what these projects actually care about. These projects don't care about anything else other than making money. All right, so let's get into the next topic of Ethereum trying to outbeat good old Bitcoin.
Race gains from Friday after federal chair Jay Powell hinted at upcoming rate cuts. Crypto exchange Gemini launches an XRP credit card, and we take a deep dive into how Wyoming has evolved into a crypto hub and the recent moves to help catapult the state to the next level. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Crypto prices are in the red to kick off the week. As of noon Eastern, Bitcoin dropped nearly 2% to $112,186 after falling to the $110,000 level over the weekend, its lowest level since July 10th. Now, Ether, it is pulling back after hitting a fresh record over the weekend. As of noon, the price of the second largest cryptocurrency fell under 4% to $4,600 after rising to a fresh record yesterday of $4,954.81.
And the thing again, right? Like they're showing an overall negative, a decline. It's hurt, but understand that this is still up nearly 100% on the year, right? Specifically for Bitcoin. Ethereum is up. What did we talk about? 40%. XRP, I don't think we talked about XRP. Let's go back to CoinMarketCap. XRP on the year, specifically for the year, right? Because we're long-term investors here. We're talking about 400% return. So you're talking like literally an average of 150% return across like these three projects, which is a wild statement, right?
Now, this came after hitting an earlier all-time high on Friday for the first time since 2021. And XRP, meanwhile, dipped below $3. Both Bitcoin and Ether have erased their gains from Friday when crypto assets took off with the broader market after federal chair Jay Powell hinted at upcoming rate cuts and investors returned to risk-on mode. Ether has been leading the crypto market for several weeks thanks to regulatory tailwinds, a boom in interest in tokenization, and buying in bulk by a new cohort of corporate Ether accumulators like Bitmine and SharpLink. Now, that shift has helped support ETH, which has held on to the $4,000 level this month after unsuccessfully testing.
Yeah, it tested. Hold on, let's go back to specifically Ethereum. It tested like 4,900 as its high. It showed up. Yeah, it's like it's trying to battle pass. Yeah, it's 48. It's trying.
Testing the resistance mark a handful of times since 2021. Okay, let's talk about the top stories. Gemini announced this morning that the crypto exchange, founded by the Winklevoss twins, is launching an XRP credit card with Ripple. The card allows customers to earn up to 4% back in XRP on fuel, EV charging, and rideshare purchases, 3%.
Now, here's the thing, specifically when it comes to credit cards. I'm really curious on how this is structured. Because if you guys don't know, credit cards are oftentimes linked with a bank. So even though Gemini, the brokerage or the platform, might offer a credit card, the back end is still managed, funded, and upheld through an actual bank. So XRP, Gemini credit card, customers 4% on XRP for gas, EV charging, rideshare, 3% on dining, 2% for groceries, and 1% for others. Partnering with merchants on 10% back on qualifying purchases. So that's no different from like a credit card benefit, right? Those benefit offers. Gemini is also offering access for Ripple USD. Ripple USD, which is listed, and I'm guessing that's like a way for it to get like, you know, the cash back as a regular credit card offers for dollars. But the thing with that, I'm really curious on how they're making their cut, because if it's a normal bank, and they're taking like they have to be like scalping 0.1% of transactions. I'm
on
not sure.
dining, 2% on groceries, and 1% on other transactions. Now, Gemini said it's also teaming up with some other merchants to offer up to 10% back on eligible purchases for all Gemini credit card holders. In a statement, Tyler Winklevoss said, quote, by introducing...
All right, so I'm not sure about that. Like when it comes to like credit card, because in the current form, it's not a direct credit card. It's like, again, like I talked about the transactional purchasing earlier. They're going to be scalping, and there's going to be more middlemen in between actually taking your money.
Currently manages under $15 million in assets. Now, this is the latest move from asset managers moving into spot altcoin ETFs, as many have applications pending with the SEC for XRP, Solana, and Litecoin ETFs, just to name a few. All right, for our main story, CryptoWorld's Talia Kaplan spent last week in Jackson Hole covering the Wyoming Blockchain Symposium. While there, she explored how the cowboy state has been evolving into a crypto hub.
Wyoming is known for picturesque mountains, roaming wildlife, and its cowboys, but the state also wants you to associate Wyoming with crypto businesses. In fact, the state is...
So I think Miami recently tried to do this. And what this is none other than a form of tourism trapping, purposely creating events to bring in money. And nothing's wrong with this. This is just an aspect of business where some government equity or some government entities, right, local or city, will just incentivize business, right? They could say like, hey, 0% county tax for any, crypto operated business. And I mean, nothing's wrong with that. It's just, that's, it's a clear understanding that the government agency behind it, the government team, the staffing are trying in designing an incoming flux of tourism based on, what they're trying to push.
Is known for being a pioneer in crypto regulation, with the cowboy state enacting more than 50 crypto-specific laws.
Wyoming was the first state, for example, to pass a special purpose depository institution statute. We have a chancery court, and we've done many creative things. Wyoming also created the LLC, and so we have a long history of being very first in innovation, even in the financial services space.
In TradFi, New York, and to a lesser extent California, are the top states. But in crypto, it has been Wyoming because we got here first.
All right, so she is the CEO of Custodia Bank, right? So yeah, they're trying to incentivize the financial cash flow of crypto to these companies. I mean, it couldn't be, it might not just limit it to only having, say, an agency or a physical company. It could just simply be like a virtual your LLC a crypto organization out of, a Wyoming to incentivize cash flow that way. So
Some of that was I tried to donate appreciated Bitcoin to my undergraduate alma mater in 2017 to fund an endowment for female engineers, and they couldn't accept my Bitcoin because the state had a bad money transmitter law. And I grew up here, even though I was in New York for 30 years, and volunteered to come back home to change that law. And one legislator, Tyler Lindholm, grabbed onto me and said, let's do more. What else can we do? What else can we do? And now there have been 8 legislative sessions, and each legislative session there have been at least 4 or 5 bills. So we're up to more than 50 now. It's bipartisan. It's shifted from the original legislators that sponsored it to a whole new group of legislators and then another one. So there's a real commitment in this state.
Our legislation is all around, we want to welcome this industry. Here's what you can do. Providing legal certainty to businesses is crucial. Although Wyoming is a very private state, so it's hard to get this information, we believe about 5,000 companies have domiciled in Wyoming to take advantage of our digital asset laws. Doesn't mean they physically moved, but they've domiciled and set their company up that way.
And now Wyoming is launching its own US dollar-backed stablecoin called the Frontier Stable Token.
See, you almost had me. You almost had me. Wyoming launches the first state-issued stablecoin. I mean, as long as it's as long as they know what they're trying to do, but again, what's the incentive?
Token. The token is being deployed on major networks like Avalanche, Polygon, Solana, and Ethereum, and will be available to the public in the coming days. Now, this comes as the U.S. recently passed the Genius Act, giving stablecoins some much-needed rules of the road, and the announcement coincided with the Wyoming Blockchain Symposium put on by SALT.
It's been 2 years in development. It is a...
Okay, so it seems like the rest of this video is specifically about Wyoming Crypto Hub. Now, if you guys love Wyoming, go on and watch that video. I am on to the next. This next video is specifically Tom Lee, who he runs like an Ethereum based. He's trying to do what Saylor's doing with Bitcoin, specifically with Ethereum, and he was on with CNBC.
Shut up, because Tom Lee is here on set. Tom, thank you.
Shut up.
All
right.
Really appreciate it.
Listen.
Yeah, great to see you, Brian.
I know a lot of people want your take on the video, and we'll get all that stuff. How has it been in April? You remain bullish even when everybody was running around with their hair on fire. Is it hard? Do people come at you and be like, how could you be so bullish all the time, Tom Lee?
Yeah, I think that we get more criticism than positive feedback to any of our views. I mean, if someone follows us on social media like Twitter, or if you look at the comments on our YouTube clips, or even sometimes unrequested inbound emails to our firm, usually it's criticism.
Yeah, it's amazing what people can do when it's anonymous, right? And they write in whatever. But those people, you've been right. I mean, you've been bullish. You've stayed long. You've stayed strong. What are you seeing maybe that some others are missing? I don't know.
Well, I think too many people are tied to their own biases. So like when markets were falling in February to April, then in their own portfolios, they were suffering damage. And as you know, that gets into people's sort of psychology because no one likes to lose money. It's more painful to lose $1 than the joy of gaining $1. But what we did was we took a step back and said, with all the forces at work, are we really going to drive the economy off a cliff? And if the answer was no, then we know that at those points of fear, that's when, as hard as it is to do, is you either have to hold on or buy. And that was our advice to clients.
Yeah, and is there anything that you see in your research, Tom, that would imply that this momentum trade, if it is indeed a momentum trade, is going to end anytime soon?
We don't. We for instance, if we take AI as a thought, and we, let's say, overlay something like the exponential growth of the wireless industry, that was a 20-year period when the number of users went from 37 million subscribers to 7 billion. We don't have 7 billion ChatGPT users, and we don't have 7 billion robots. So I think if not yet, that's right. And so if someone's trying to ring the bell at the top for AI, they're underestimating how quickly penetration grows. We're probably in the first quarter or first third of that cycle for AI.
Okay, if I had to take the other side of that trade, and who am I, but we'll talk about this, by the way, with Christina Partsinevelos coming up soon, is that people are spending a lot of money on AI, the Metas of the world,
So the overall thing, right, with this specifically is that the money has to go somewhere, right? At the end of the day, I don't care who you are, the money has to flow. It either is going to flow into crypto, it's going to flow into real estate, it's going to flow into private investment, which will likely flow into something else. But the money has to go somewhere. If people are withdrawing from the S&P 500, they're going to be putting it into real estate or holding it cash on hand. The money has to go somewhere. So while all this downtrodden, bearish cases are discussed, understand, well, what's the next edge case where people are putting their money into? And you could be putting your money into yourself, which you're understanding a skill, because competency again gets compensated. But at the end of the day, understand that just because they're talking about stocks and people are withdrawing their money, or people are talking about real estate and withdrawing their money, understand that that money has to go somewhere. So try to ask and critically think about the next 3 questions. Where are they putting their money? How are they holding it? What are they storing it in? What's the rate of return on that? And all of those questions in between.
The next leg of this record-setting rally. It's clear where our headliner stands on that topic. He's bullish, as you know. He is Fundstrat's Tom Lee. Joins us now at Post 9. It's good to see you.
Great to see you, Scott.
NVIDIA looms large. Does that make or break whether your bullishness comes to fruition?
The thing with NVIDIA, boy, it's getting too big at this point, right? Like, if you're a bull or a bear, you should be questioning how big can the bubble get.
Fruition moving forward?
I know investors are really anxious, and NVIDIA has not performed well the last few times it's reported. But the story arc there remains that is one of the most important companies in the world, in the middle of the biggest structural change in the world economy. So I think NVIDIA still is a great story. It really wouldn't change our thesis if the stock reacted poorly.
You feel like there's become a little more AI anxiety, as we wrote at the top? From Sam Altman at OpenAI saying that investors are a little overeager about AI. Meta's reorganized again. They've stopped their hiring. There was another report today that suggested some of these Gen AI models are failing. Do you think there's anxiety in this market about this trade?
Well, I think everyone's trying to get situational awareness. Like, is this inning 1 or 2 or late innings? Because we know there's been a lot of value creation and a lot of capital that's flowed in. And we know that Silicon Valley has seen a boom of companies with $100 million annual run rates, like in record time around AI. And a lot of people want to ring the bell at the top. But to me, it still feels really early because there's such a limited number of stocks that public investors can buy that represent a direct play on AI.
I know, but that could lead to bubble-like activity, right? When your pool of investors...
Now, the term bubble is always there, but there has to be like something that sets it off. And if you guys know exactly what that is, let me know.
Having its 1971
All right, this is going to be the last video we check out for the day. Unless you guys drop anything in the chats, Tom Lee, all hell is going to break loose in crypto.
Equivalent.
Something almost crazy right now is happening with Ethereum.
Is the supply contracting or not yet?
It's actually growing about 1%.
Growing
which is
1%.
Slower than Bitcoin's inflation rate.
Okay.
It's actually a third of Bitcoin's inflation rate.
We literally haven't seen this for years, that the amount of buy volume on the hourly chart is going parabolic.
And how big do you think that could be?
Well, I think that there is a very high probability, I'm going to say maybe even 50%, that Ethereum's network value...
Watch today's whole video if you're invested in Ethereum so you can make the best decision for you as an investor, and it is no secret. In Jerome Powell's speech today, he started this pump. He is caving to Trump. Listen in.
In the near term, risks to inflation are tilted to the upside, and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. Our policy rate is now 100 basis points closer to neutral than it was a year ago, and the stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. Monetary policy is not on a preset course. FOMC members will make these decisions based solely on their assessment of the data.
So the market is pricing in 2 rate cuts.
Now, what he said is he doesn't think employment's looking good.
But by the end of this year, both the market and the FOMC pencil in 2 cuts by year's end. No matter what happens in September, to me, it is much more clear on where rates will be 2.5 years from now, even clearer than where there will be 2 months from now, which is probably lower. In 2026, Jerome Powell is out of the Federal Reserve regardless. Donald Trump puts in somebody new, presumably somebody who shares the same views of high growth, low rates like he does. But the rate cuts are starting again, most likely in September. That's why we're beginning to see life again in crypto. That's why Ethereum has started to pump. At the recording of today's video, Ethereum actually just hit a brand new all-time high. We have not seen that since the NFT bubble of 2021. We know that there's natural, heavy, actual buying taking place in the markets. Ethereum taker by volume hourly hits a multi-month high of 5.76 billion. What's normal for Ethereum? Well, On any given bull market bullish day, anything I would say from 3.4 to maybe 3.7 would be a very bullish day for Ethereum. 3.7, 3.8, very bullish. We're hitting almost double that today of 5.76 billion. We know that the traders betting against Ethereum, shorting Ethereum, were wrong. They're getting liquidated like crazy. And if you're wondering, am I too late to buy Ethereum? Is this pump closer to the end or closer to the beginning? In this exclusive clip with investor Tom Lee, he says, this is like 1971 when the dollar left gold. Ethereum is becoming Wall Street's new tech stack.
So keep in mind that the Genius Act and then SEC's Project Crypto is the recognition that using blockchain makes Wall Street faster, more efficient. I've seen it at Bitmine because like when we get the cash, the minute it touches the blockchain, it moves much, we have much better visibility and it's much easier to move, to actually track the money. The wallets are all tracked. And this is like 1971 because in 1971, the dollar went off the gold standard.
Yeah.
And everyone said, oh, I'll buy gold instead. But remember, the dollar suddenly became a fiat.
Yeah.
And Wall Street innovated because they said, now we have a dollar. Let's make sure we can move the dollars efficiently.
You don't need to move bars of gold to match the movement of the
Correct.
dollars.
So it created Wall Street, came
Yeah.
out of that single act in 1971. So now, 2025, Project Crypto from the SEC and Genius Act is saying, Wall Street, take advantage of this new technology to make Wall Street a tech industry. But they're all choosing to do it, or the majority are choosing to do it on Ethereum. Ethereum is a smart contract platform, has what they call EVMs, Ethereum virtual machines. So you can do basically a lot of smart programs and contracts. That's where Robinhood is doing their stable coins, the tokenized products on top of Ethereum.
That's the thing. Ethereum has always been more of a useful case, right? Specifically for developers rather than a active case on all of the other crypto coins, crypto projects. It's always been one of those where people go to build. And I think the biggest thing that hurt Ethereum specifically was like during the initial stages was like the transaction fees, was the increasing of supply, and was the delayed fallbacks of the crypto projects, right? I think the level of like going from proof of or going to proof of stake like continuously got delayed, and that was like during a really pivotal time.
So not that Ethereum can't crash again, right? It crashes every day to a certain extent. But Ethereum has followed the same script every cycle. 2017 was range bound, then it broke all-time highs, then mania. 2020, it traded range bound, finally broke all-time highs, then mania. In 2025, it just broke all-time highs. Again, past performance does not mean future results. I think something to compare this to in this case is Solana. By the way, click subscribe to Altcoin Daily if you appreciate this perspective, because looking back on Solana, we know that Solana broke all-time highs in 2024, last year, before Ethereum ever did. Just like Ethereum though, it had its old all-time highs in
The thing with this is like it's so hard to individually pick out what specific project. And yes, while they do oftentimes follow trends, Ethereum in this case was specifically picked out for Fed and or government intervene of like, hey, the Fed is going to invest in this project, so it's going to see an overabundance flow into that project, right? So can you say the same with all of the other crypto coins, or do you have to individually pick that out? Say one day the transactions are just overwhelmingly on one crypto, then obviously it's not going to follow the trends, but people are going to try and buy on the other edge cases, right? They could just try not to.
NFT Mania 2021, like many altcoins, all altcoins, older altcoins, then finally broke all-time highs. And then what happened? It teased us, immediately corrected, went back again, about to break out the new all-time highs again, and then went range bound for months, but the trend remained intact. So I just want to prepare you. Yes, Ethereum just broke all-time highs. Yes, historically, that means we're going to the vertical phase for ETH. Does not mean you shouldn't be prepared for everything. And that brings us to what Tom Lee said next. I think there's a very high probability that Ethereum will flip Bitcoin.
How big could ETH get? How I hate the term market cap because it's not applicable. Your company has a market cap. ETH doesn't have a market cap. It has a market size.
He has a network value.
What is the current value of all the ETH in the world? How big do you think it could get? Because working backwards, that's what the 5% stake in ETH, right?
Mm-hmm.
Okay,
yeah.
so what do you
It's
think?
about 480 billion right now of fully diluted network value.
Okay.
But
is the supply contracting or not yet?
It's actually growing about 1%.
Growing
which is
1%.
Slower than Bitcoin's inflation rate.
Yeah, that's the thing. If the supply, again, with the transaction fees, yeah, that's an interesting take. Yeah.
It's actually a third of Bitcoin's inflation rate.
Okay. How big do you think that could be?
Well, I think that there is a very high probability, I'm going to say maybe even 50%, that Ethereum's network value will flip Bitcoin's.
Wow.
Like when?
The flipping.
Maybe in a couple years.
People have been saying this for a long time.
Yeah.
How much bigger is Bitcoin now? Is it
It's 2.2 trillion right now.
And ETH is what, 400 billion?
Yeah. Oh,
But you're not an ETH maxi. You think
I'm not. I'm
you
still a
think there will
Bitcoin
be
bull.
both?
I think Bitcoin's
Okay.
going to 1 million, but I'm saying like Ethereum's relative size, the ratio will actually be 1 to 1.
Anybody looking to trade the market, I recommend exchange partner WeX. Use code altcoin dollars. They'll $1,000, and they're giving you. I want to leave you with this because to me, the only thing that would stop this Ethereum rally is if you believe we're in at the end of a big tech, crypto, Trump pump.
Now going back to that whole, it's going to flip it. He thinks Bitcoin's going to 1 million. In order for them to still even hold pace, right? Crypto, specifically Bitcoin, it needs to 10x. Ethereum is still a fourth of what Bitcoin is. So just for them to currently be even, you're looking at a $20,000 Ethereum coin price tag, and it to 10x from there. Right, like that. Is that what we're talking about? There's, you know, are you guys looking at a 200K Ethereum?
Pump bubble. Is the bubble going to pop? This is one of the most accurate indicators for predicting Bitcoin tops. This one metric predicted Bitcoin's market top in 2021 within 3 days. The Pi Cycle Top Indicator was created by Philip Swift back in 2019 to predict Bitcoin's top within 3 days. It gained great popularity when it again predicted Bitcoin's local top within 3 days back in April of 2021. How does it work? Well, the indicator signals a top whenever the 111 daily moving average crosses above the 350 daily moving average times 2. And it's been incredibly accurate. These crossovers are shown as white dotted lines in the above chart. And we see that. We see a dotted line. We see that it correctly predicted the top within 3 days back in 2013, back in 2014, back at the end of 2017, and it predicted the Bitcoin top of 2021. The name Pi Cycle Top comes from the fact that the fraction 350 over 111 is as close as one can get to pi 3.14 when dividing the integer 350 by another integer. So there are no guarantees, but this indicator has been pretty accurate thus far in predicting tops. And what is it telling us about Bitcoin today? That we're not at the top, meaning the moving averages are not about to cross. We're still in bull.
Yeah, that's a hard one to follow, right? Specifically because past performance doesn't always indicate future performance. So, you know, it works until it doesn't, kind of thing.
Territory.
But you guys let me know. Did you guys like just talking about crypto today? I know I normally don't. It is what it is. Again, when it comes to the aspect of personal finance or investing, I think more people need to be on the front end of being able to increase their income source rather than speculative investing, which is what I put on the second end of it. So, like always, like, comment,